Okay, welcome to today's uh, Zoom session or video session, and this will basically focus on simple trading ideas. Uh, Trading ideas in the sense of how you can determine which trade to take, what is your entry, what is your exit. Uh, in trading, you need to have a strategy. Uh, the three pillars of trading are one, having a strategy. And in a strategy, it means determining how to take a trade, what do you look at, and what determines uh, what qualifies to be a trade worth risking. Uh, what is your entry and what is your exit? And exit can be either in the form of the TP, take profit being hit, or the stop loss being hit, or if you are not the kind that uses stop loss, but there is a level at which you know hii trade imeenda vibaya. The trade has aborted, and you decide that I want to exit with whatever loss I have. And so that's the strategy. The other one is risk management. We'll have another session for risk management. And the third one, the third pillar is discipline. Discipline is sticking to your plan. Now, strategy is easy. You can get it within a month or two or three. Risk management and discipline and patience to wait for the setup to be valid is where we struggle, and we all struggle. Hata mimi na miaka tatu sijapiga, miaka mbili na nusu. Those are things that you'll always find yourself misbehaving here and there. And so mine will focus primarily on the strategy today, but we'll have a session on how do I do my risk management. Now, last time we covered the support, resistance, and trend lines. Just to recap, I'll draw a few examples. Here's an example of a resistance, an area on the upper side where the price gets a ceiling, it drops, gets a ceiling, it drops. When it's on the lower side, it's called support. These are support. The other side is resistance. Now, if you have a diagonal support or resistance which touches 2 or 3 points, then uh, it's called a trend line. And when those trend lines are parallel, or when you have a support and resistance uh, at the same time, then it's called a channel. Those are the basics that we covered last time. And that is what I'm drawing right now. You can see first point, second point, third point touched. Inagonga trend line, inapanda. Hits the trend line, inapanda. So that's it. Uh, uh, I asked the previous participants, mtu anichoree support, resistance, and trend line. Unfortunately, not everyone was able to do that. But now we'll pick it from there. Now, a majority here are beginners. Mtu ajai, the last time ulionana na charts, or the last time you interacted with charts was probably in school. And so some are allergic to charts and graphs. But now these are charts that translate into money. So you have to bear with them. So there are a few things that you mentioned, and that's where we want to pick it up from. How do you determine taking a trade at a key level? Now, let me zoom in and mention a few things. Now, sometimes, and most of the times, you'll find that there is what is called a previous high or a previous low. A support or resistance is where it has already been tested. However, assuming the price was unfolding, it forms this level. Now, if you look at this, you realize there is no previous level on the left side. And so this is where it hit, came down, and then it starts unfolding. What happens is price ikifika a previous low or a previous high, like this level, when it gets there, most often it will react. So one of the ways of identifying simple entries is just look at previous highs or previous lows. When the price gets to that level, you find that it gets to this level, it reacted. Now, there was another level below. Now, once it formed this is a confirmed resistance. But before it was simply previous high. Now, the moment it hits the previous resistance, you find that around that level, most often it will react. So what happens is this is a bit advanced. It's called liquidity. Though I explained it. When people know that there is this level, resistance or support, what happens is that people will take buys at previous lows or support, and they'll put their stop losses just below. Just below. And what happens is the big institutions will first sweep those stop losses which are just below and then go in that direction. You'll also notice that at the resistance, the market moved slightly high above the previous high before it went in the opposite direction. So that's what is called a liquidity sweep. You see, like this one is a strong support. A strong support. So the market came in, it broke this level, but now if you want to know whether it's a break or retest, it will break the level, retest and proceed in that direction. Nakumbuka kuna mtu aliniuliza hiyo swali nikademonstrate. Alternatively, if it does not break and retest and go in that direction, it will go back into that zone and you'll find that it engulfs the previous level and proceeds in the opposite direction and end up to the previous resistance. Now, these are things that you'll find repeating time and again. Look at when the market got at this level, before it got to this other level, it gets to that zone, drops, gets to previous low, buys, previous low, buys, and then it sweeps liquidity. Sweeping liquidity means simply going for the money, your stop losses, before proceeding. So there are two ways you need to confirm to make sure that company break and retest, breakout is confirmed by a retest of that zone and then going in the opposite direction. So if, let's say, in the future, this level is broken, you find a break in this level, first way to confirm whether it is going back to the zone or whether it is breaking, once it breaks and retests this level, it will form a pattern to buy. Now, let me give an example of a break and retest. Here is a level that was broken. Support, came back, reacted, bought, came back, broke this level, it retested, and then continued. Now, look at every time there is a key level, a previous high or a previous low, you'll find the market reacting. So one of the ways of simply taking a trade is just a minute. So you can backtest, you can look at another chart, look at every time there is a previous level, the market tends to react to that level. So one of the things that you can be doing as a beginner, remember majority here are beginners. So we are looking at what are those things that you don't want to complicate life. Of course, these are the basics, and then you continue building on this. Look at every time it gets to a previous level, it reacts. Look at what happens, gets to a previous level, it reacts. Look at the market, every time it gets to a previous level, it reacts. And it's a pattern that repeats itself day in, day out. Now, remember, no strategy is 100%. So there are those cases where you'll find that it won't behave exactly the way you anticipated, but you'll find most of the time, majority of the time, look, even if it were to break and go higher, it first go to this level and then reacted. Go to this level and then reacted. Look at this level. Go to this level and then reacted. So your work is to just look at what were the previous levels and how does it react. Now, what do you look out for at when the market gets there? Now, sorry. What do you look out for when the market gets to those levels? Now, by those levels, I mean, remember, we are building from support, resistance, trend line. Now, remember, there could be a trend line. There could be a support, resistance, trend line. So what are you looking out for? Support, resistance, trend line. Now, that's where I want to bring in the second thing. The first one we have seen is looking at the previous level. Now, it could even be a trend line. Look at this. The market gets to the trend line. It reacts. Unaona kama hii ligongo mara ngapi? Ilichezea hapa, kagonga, ikashuka. Now, these are some of the simple things that you look for. Now, the other thing is if you want to know whether the market is about to buy or sell, it has been buying. Look at this, it was forming higher highs, which we discussed last time. So the other thing you look out for is, at those levels, what is it doing? It is forming lower levels, like it is stepping down. That tells you there is a possibility of selling. Look at what the market does before it, every time before it starts selling. It forms like steps. It has been buying, and then the moment it reacts, it retraces, it fails to hit the previous high or the previous low. So in other form, ni kama steps. It is stepping down. That tells you that that market will probably sell. And that's how you also trade triangles. How do you know when, leave alone a wedge? A wedge is one which is forming like an arrow, the shape of an arrow. There is a difference between Let me try to draw. Let's say the market is forming something like this, and so when you see the market forming something like this, it's forming like stairs that are ascending, and the opposite is true. You'll find that and these are patterns you'll check, you'll backtest, and also you can watch more videos, at least with these basics. You'll find that most often it will buy from this point. And what happens is that, first of all, it will come, it will break the side which is flat, retest, and then go in that direction. You can go and backtest and confirm. And most of these cases, you'll find it will break out in the direction of the side which is flat. So it's like forming higher steps. Now it is not as smart as the drawing, but you see on the charts the way it's forming lower levels, lower levels, lower levels, which means that it's headed for a sell, and eventually it drops. You see, like this one. Let me see the example of a triangle. Triangle. You find that there is a side which is forming a resistance, a support, and then it's like it's heading to a convergence point. So this side is dropping, but this one is flat. Eventually, it breaks and drops. Now, those are some of the simple things you can look for. But now, sometimes you're not able to see the pattern more clearly on one time frame. So what do? You can look at different time frames. And if you are a small account holder, and I know majority of us are, trade usually between 15 minutes and maximum 4 hours. So you can see these patterns as you look through. You'll find that you zoom in, you'll find these patterns hidden. It may not be visible in one time frame, but it's visible on another. So let us look reaction at previous levels. Look at this, it got to this level, it dropped. You'll find reaction around the same level, it dropped. Remember, support is not a specific point, but a zone. Look at how it behaved at this level. This was previously a low. This one had not been formed, but the moment it got there, it reacted. So you'll find these areas covered if you look at your charts keenly. Now, the last thing that I will cover today is I mentioned something to do with the order blocks. And order blocks is when the market is selling, the last bullish candle before it sells is called a bearish order block. Hapo unajua kuna kizungumkuti. It's bullish, but it's called bearish. The reason it's called bearish order block is because it is the last candle that led to a sell. And the last candle that led to a buy is called a bullish order block. Now, that's one. Secondly, we look at engulfing candles, which is something I described last time. And bearish means, engulfing means that the candle is completely covered. If it's the blue candle, it is completely covered by the red candle. My way of looking at it is it can be covered by one or a maximum two. And how do you trade around those areas? Now, around support and resistance, this is what I recommend that you look at. Now, if you are at a significant level, and a significant level in this case, I mean a support or a resistance. Again, before you proceed, never buy near resistance and never sell near support unless it is a confirmed break of a structure or break, the level has been broken. Technically, the buy side is called, the resistance side. You see the way this one came and reacted to this level. Now, when you are near resistance, it's called premium. And when you are near support, it's called discount. So you are told you don't sell at discount and you don't buy at premium. In other words, when the price of a commodity is very high, chances are it will drop. So it is at a premium price. And when it is at a very low price, we say that it is highly discounted. And so you cannot go and sell where there is already heavy discount. It means that chances of you getting any profit are very low. We have 10 minutes, and so I'll try to cover what I wanted to say. The concept of engulfing within those 10 minutes. And then maybe the next one, I can create one for asking now the question. Now, what do you look for? Now, near support and resistance or near key levels, when you see a bearish candle fully engulfed by a bullish candle, that is an OB, what it means is it will usually buy. And that the moment that candle, you wait for that candle to close. Unangoja ifunge. You see, like this one is already the candle that is still playing around, it is here to close. But now backtesting, you see, like when this candle is fully engulfed, it means there is a 90% chance that the market will buy. Now the question is, how far will it buy? Now, two ways that I look at it, and you can go and backtest. One, look up to the previous. If it is buying up to then the previous, on the left side, the previous resistance. However, you'll find most of this will not hit the previous resistance. What it does, it goes up to the next OB. Now ujaribu. This simple concept, itakupea pesa. That one I can guarantee you. You see, like this one, let me take look at like this one is near okay, you mark this, naona kama hii haikufika, but you see there was an OB here, which means the moment it got to this OB, it bought. Now this one did not engulf. The wick of the red candle is still within, is still not covered, but it took two candles to engulf this candle. So I advise that it's either engulfed by one candle or maximum two. What happens is the next level that it can go to is you can take your TP at this green candle. Utaona ilifika kwa hii green candle, it first reacted, even if it went, it proceeded. Now, look at what it did when it got to this level. Now, it did not get up here, but the moment this candle got engulfed by the green candle, got engulfed by two bearish candles, it continued selling. And you can take the lower time frame and look at which is the lowest OB, and you'll see that it comes all the way to the previous OB. And look at this, it even got to this OB that was down here. Look, every time a candle is engulfed by two, look at this one. The red candle was engulfed, and as much as it played around, it got to at least this OB. At the moment imefika, unaona kwanza ili react. So every time it's a candle on the a bullish candle is engulfed, ikiwa pande ya juu, look at the behavior. This one is engulfed. It took, okay, the first one, like equalized it, and then the second one engulfed. It went all the way to this OB down here. Utaona kama hii imekuwa engulfed. The next OB, the first one is this. So you can take your profit here. You are not sure itafika huku juu. Number one, I always say, hakuna mtu anaamkanga asubuhi kutafutia mwingine pesa kwa hii soko. So the same way you are looking money from the market, someone else is looking money from you. So when you lose money, someone else is making that money. So let us look at more examples. You can zoom in. If a concept works, you should be able to demonstrate it in more than one chart. So look at, for example, this. You see, like this one was, it took two candles to be engulfed. Ilicheza, but the next level was up here. At least ilifika. Something else that I recommend is a trade has a potential, will have a potential of going 1 meter away or 10 meters away. But if you are sure, ile profit iko sure ni 2 meters, just take that small amount. Don't wait for $20, $30, while ile pesa uko sure naye ni $5. Take your $5, that is what you are sure of. Because you might be waiting for it to come all the way up and then ikatalia huku katikati. So you can test that concept of OBs and how they react. Look at this. This is a third chart. Look at this candle. First of all, it was near a previous low. Yes, it did not get to this lowest part. But you see, the moment this candle was engulfed, this red one, at least it went all the way to the previous, to the next OB. Now, when this one got up here, when this green candle, okay, this one is not a good example. It took almost 3 candles to be engulfed. Let's take an example of this. Here is one which ilipatia watu character development. This one, it got engulfed by 2, but by the time it got here, kwanza ilicheza before ifike. Eventually ilifika, but it took a lot of time. So how do you determine if your trade has backfired? Now, if your entry level was the engulfing of this candle, if the market goes above that level, funga your trade, or you put your stop loss above that. So your trade, you risk losing any amount that will be accumulated up to that level, but your next profit will be around 2-3 times your risk. So you can backtest that, and then tunaweza discuss. So iko maswali? Any questions in the next 2 minutes? I'll stop presenting. I mean, any question?